Activity-based costing. So activity-based costing occurs when we have more than one overhead rate. This can be used in combination with job costing. So remember, job costing is used when we have unique products or services. Activity-based costing is a way to apply overhead to jobs. Under activity-based costing, we separate the overhead allocation to have multiple rates. We create activity pools and we divide up our total amount of overhead between different pools. A company needs to decide for itself what an activity pool should be and what overhead expenses should be included in each activity pool. So there's just a variety of activities here that create overhead costs. So first, we divide the amount of total overhead costs into a number of activity cost pools. So we might have repairs is one cost pool, and building maintenance is another cost pool. Machine setups is a cost pool. And then we divide up which overhead costs go into which cost pool. The advantages of activity-based costing is that it gives us the truest idea of what our true product costs are. It gives us a better idea of selling prices. It helps us to understand what activities are happening that create overhead costs. It gives us a better idea of how to control those costs if we want to reduce our product costs. And it allows us to evaluate our production. There are disadvantages to activity-based costing. The single disadvantage to activity-based costing is that it is expensive to implement and time-consuming. Using a single overhead rate is much faster and much easier. Doing all of the work to create an activity-based accounting system where we have multiple overhead rates adds a lot of complexity and cost to our job costing system. However, it is considered the single most accurate way to allocate overhead costs. So there are trade-offs. It's expensive, but it really is the best way. Here are some examples of costs and cost drivers. So remember, the cost driver is what drives the cost. So for example, we might have materials purchasing, and we might use the number of purchase orders to calculate our overhead. So think about that $100,000 before in our last video. So we decided that we were going to do a single rate and use direct labor. So we divided that whole $100,000 by our total numbers of direct labor and came up with an overhead rate. In activity-based costing, we would separate that $100,000. So maybe we decided that $15,000 of that goes to materials purchasing. And we're going to take that $15,000 and divide it by the number of purchase orders that we average in a year. Now we have an estimate for materials purchasing. Then we're going to take another chunk of that $100,000 and we're going to put it on inspection. We're going to take $10,000 and we're going to put it on inspection. And we're going to divide that by the number of units inspected. So let's look at the example from the textbook and how that gets applied. So we have the same basic calculation. we have our total estimated overhead costs for that activity cost pool. So that's when I said, think about if our total costs were $100,000 for overhead, and then we decided that $15,000 goes to purchasing and $10,000 of that goes to inspection and $20,000 should go to direct labor. So we separate it out, and that's how we come up with each rate for each activity. Then we assign costs to our products based on that rate that we calculated and the actual activity that occurs on that product. So we're going to look at this. In this example, we start with a single application rate. So we have a company that makes 2 lines of filing cabinets. They make metal filing cabinets and wooden filing cabinets. In a typical year, they sell 42,000 metal cabinets and 9,000 wooden cabinets. Their total overhead costs is $249,600 a year and is currently allocated to products at a rate of $1.60 per direct labor hour. Okay? So we can see here that using a single overhead rate of $1.60 per labor hour. So we have metal cabinets, we make 42,000 a year, and those take 2 direct labor hours each. So we have 84,000 direct labor hours as a result of metal cabinets. Wooden cabinets, we take 9,000 units, and those take 8 hours of direct labor per cabinet. So we end up with 72,000 direct labor hours. So our total direct labor hours are 156,000 hours. Which, if you take $249,600 in overhead divided by our activity base of 156,000 direct labor hours, you get $1.60 per direct labor hour. So our rate is $1.60 per hour. We've decided to separate those costs out into activity pools. So we've decided to separate our cost, our total cost of $249,600 into 2 overhead pools. We take 180,000 of it and we create a maintenance cost. And the other $69,600 are utilities costs. We are going to separate our maintenance department costs by employee and our utilities costs by kilowatt hour. So then we're going to separate them into activity cost pools. So we've decided that repairs and setups apply to the maintenance department costs. 60% of our employees work on repairs, and 40% of those 5 employees work on machine setup, getting machines ready for work. So we take our total $180,000 in costs. We put 60% of it in our repair cost pool, 40% of it in our setup cost pool. Then with utilities, we're going to divide that out by kilowatt hours. So we have heating and then running machines. We anticipate that heating takes up 35% of our yearly kilowatts, and that running machinery takes 65%. So we take our total utility cost of $69,600 times 35%, and we allocate that cost of $24,360 to the heating cost pool. And then we take the rest of it and allocate it to the machinery cost pool. So we've separated our overhead costs. We've decided what the basis for allocation is, and we've set up 4 activity cost pools. So we have 4 activities: repair of machines, setup of machines, heating for utilities, and machine use of utilities. Once we have that, then we can decide. So we've already talked about what happens here. So we have the 60, 40, we separate our costs. That's part 1 that happened here. Then once we have those 4 cost pools set up, we're going to decide how we allocate our overhead. So our repair cost pool, we're going to use the number of work orders. So we can see here that the metal filing cabinets use about 80% of our repair work orders, and the wood filing cabinets are 20%. So we're going to separate that cost pool divided by the number of work hours. We do the same thing with each. So we have the number of production runs for setup. We separate that out by the 200 production runs we run per year. For utility, a common allocation for utilities is the number of square feet in a factory. So we divide out how much square feet we give up to the manufacturing department for metal cabinets and how many square feet the wood department takes. And that's how we're going to separate out how much heat those departments use. And then the last activity base is our machinery utilities. So we decide to separate those out by machine hours. So our rate is machine hours. We would do how much per machine hour. So here we have that the metal filing cabinets take 90% of our 50,000 machine hours, and the wood filing cabinets take 10% of our 50,000 machine hours. Then we add up how much overhead each product line gets. So metal cabinets have a total overhead applied to them of $201,822. We make 42,000 cabinets, so our overhead cost per metal cabinet is $4.81 if we use activity-based allocation. For our wood cabinets, we end up with $5.31 per unit. So let's look at how that applies to our overhead. So if we put that into a table here, what we just saw in the chart, see that we have overhead cost per unit for metal cabinets of $4.81 and wooden cabinets of $5.31. How does that compare to the way that they were originally doing their overhead? Well, we see that here. So the manufacturing overhead that we just allocated using activity-based costing is $4.81 for metal cabinets and $5.31 for wooden cabinets. If we go back to the original way we were doing it at $1.60 per direct labor hour, we were allocating $3.20 in overhead to metal cabinets and $12.80 to wooden cabinets. You can see that there's a difference in the overhead application method. Overhead is one of those tricky things because we cannot trace those costs directly to products. So we have to find a way to figure out how products are using different resources. Things like, how are products using our utilities? How are projects using our buildings? There is no right or wrong way to allocate overhead. But as we can see here, the different allocation methods give you different results, which give you different product costs. So changing your over allocation method from a single rate of $1.60 per direct labor hour to an activity-based costing changes the amount of overhead you apply to each product, which then means that you can change the price that you charge for each product. So what you found is that because metal cabinets, we make 42,000 metal cabinets per year as compared to 9,000 wooden cabinets, we can apply more overhead to metal cabinets. They take up more factory space, we produce more. We can see how that affects our pricing. So we have our total manufacturing costs once we include in the direct materials and the direct labor. If we use our activity-based costing overhead, then we have total manufacturing costs per unit. This company determines their sales price as a percentage of total manufacturing costs. This is called a product markup pricing system. So if we take a product and we just mark it up by a percentage of its cost, we determine the selling price. So our original selling prices here for the single activity-based system, so at the direct labor hour, these were original selling prices. These are the new selling prices that we calculated based on the activity-based system. Sorry, I didn't mean to do that. So there is a change in the price. Metal cabinets price went up and wooden cabinets price went down. As I said, we are going to do a lot of examples in class. So ethics and fraud in cost accounting. So as we allocate overhead expenses, we can get into ethical situations there. So maybe we would say, let's allocate more overhead to wooden filing cabinets, not because they actually take more resources, but because they were a specialty item that we can charge more for, which means that we have a better profit margin on the filing cabinets. So we can create misleading financial statement information if we're not allocating our overhead properly. Now, as I said, how do you say whether or not you're calculating overhead properly when it's up to each individual company to really decide how they allocate overhead? That's one of those things that overhead is a judgment call. An allocation of overhead is a judgment call, and it's a very difficult thing. And companies struggle all the time to decide whether or not they are really doing it to the best of their effort. So that's where cost accountants need to really understand how overhead works, what drives the cost of overhead, so that we're allocating overhead to the best of our abilities using the knowledge and information that we have. That is chapter 17.